The US dollar is waning favor with investors. What lies behind the greenback's confidence? First, the US Fed is not going to scale back monetary stimulus. Second, yesterday's ADP report logged a positive change in the US non-farm employment, though the data undershot expectations. This pushed the US stock indices down but benefited the US currency. Following yesterday's ADP employment report, the US dollar index edged down. Now it's trading at near 91.2750. Both the technical picture and the fundamental background indicate that the uptrend has been disrupted. The index is expected to correct downwards, trading in the corridor between 91.10 and 91.30. The Japanese yen has been trapped in a narrow range for 3 days in a row. The dollar-yen pair has been trading between 109.20 and 109.40. The currency pair is anticipating a market catalyst, which will determine its mid-term trend. Perhaps that market catalyst will be the official US non-farm payrolls, which are due on Friday. The employment is expected to be strong in April, so the dollar-yen pair is likely to reach the upward target of 110.43 tomorrow. At the same time, the Australian dollar is taking advantage of the standstill in the market in anticipation of the US government data on the labour market. With moderate support from rising prices on iron ore, the Aussie gained 42 pips against the US dollar yesterday. The technical factor is also making its impact. The nearest level of 0.7767 seems to be too strong for the flat market. It makes sense for the Aussie to overcome it with a view to a more important target. For example, 0.7820 looks like a considerable target. However, the Australian dollar hardly aims to hit it ahead of the publication of the crucial report from the US. So the Australian versus the US dollar pair is set to trade in a narrow range today. You've watched Daily Financial News. Subscribe to our YouTube channel to keep track of all the latest events on financial markets together with us on Insta TV. See you back soon.